Hey Dale.
Welcome to Face, Anthony.
Hey, how's it going?
Really great to meet you. And have you used Zoom before, buddy?
I have. I've got.
Okay, so are you going to share your screen?
Uh, Let me just see if I
You don't
can.
have
It
to.
says you cannot start your video because the host has stopped it. Do I
No,
need to be permissioned or?
uh, uh, let we could. No, you could go ahead and share your screen. It's a green box.
You can let him share his
Oh, okay.
camera
So
if he wants as well, Dale.
Yeah,
But
you
but
can. Yeah.
yeah, it was
let,
the for the camera. I like looking at Steve when he was talking. It was good with the camera.
Okay, go
uh,
ahead. You put the camera on.
there you go. I just promoted you. I just promoted you to co-host, so you should be able to use your camera as well. Try it out.
Okay, let me try it now.
There you
All
go.
right, buddy.
We can
Nice.
see you.
Guys,
Hi.
hey, I had to actually come into the office in the city of London for the first time in 4 months because in the southeast of London, the internet completely has gone down.
It has COVID.
What's that? Sorry.
It has COVID.
It has COVID. Certainly, it's fried the wires, I think, of the
All right.
broadband.
Well, you know what? I tell you what, it makes everything more difficult. So you've been telecommuting for a while, and I can see the office is pretty empty. You guys work telecommuting from
Yeah, yeah.
nowadays?
Everyone's
Yeah.
completely from home at the minute for the time being.
Okay.
In
All
my
right.
in our office building, I mean, there's other companies. There's just zero people around still.
Uh, okay. Well, I like to start off, Anthony, with asking people about the beginning of their career and how they got involved in the industry and what they were doing prior and what their first gig in the
Yeah, yeah, sure.
financial markets were. Can you get in your time machine and tell us what
Absolutely.
it was like at the beginning of your career?
Absolutely. Yep. Where would you like to start? Right at the
All
beginning?
right. Yeah. Yeah. How did
Yeah.
you get involved?
Yeah. So um, my introduction was a little bit different from, I guess, the traditional route of, kind of always having a definitive plan to work in markets. My older brother, Matthew Cheung, he was trading at the time with Refco. If you
Oh
remember
gosh,
Refco.
I remember Refco.
Yeah, so he was at Refco, and at the time he started there, so he's probably he's 4.5, 5 years older than me. So I was still studying at the time, but I used to come up to see him in London because it's different city where I was studying, and I'd come on the trading floor of Refco, and back
Yeah.
then, the prop floor was pretty big, maybe 150, 200 guys on the floor,
Huh.
um,
Back
and
then is what year?
that would have been early 2000s, 2001, perhaps.
Okay.
Yeah.
Okay.
So,
All right.
um, yeah, before it all came undone for Refco.
Right.
But
Right. And also when there was still somewhat of a trading floor going on.
yeah, at that point.
I
So I
mean,
did.
the exchanges. You're talking about Refco having their own proprietary trading room with not on the
Exactly.
trading floor, right?
Absolutely. Yep. Yeah,
Okay.
in the London office.
Okay.
So, yeah, that was my first kind of insight into it. And then what happened was Refco had their own internal analyst desk. So there was a kind of the setup of the guys used to sit in the middle of the trading floor with kind of a horseshoe of 30 odd computer screens monitoring all the major news terminal systems, things like that. So I got to kind of see that as well as all the other guys that were trading, and they kind of, being the little brother of a guy that was already there, I kind of got taken out and things like that. So I got to know all the guys, even though I was quite young at the time, 16, 17 initially. And then completed my studies, and I finished university in what would have been 2005. And then at the time, my brother had gone from trading to then he was running the European desk on the analyst side, doing the squawk box internally
Well,
for Refco.
everyone used to have those. Remind people, Anthony, that the little box that everyone would have on their desks that would broadcast to all the different branch offices what the company, the firm, the analysts were thinking for the
Yeah,
day.
exactly. So all the guys were trading intraday props. So they were trading predominantly fixed income futures at the time, but that kind of grew into different asset classes. So the guy's job was to basically let the traders do their thing, and then the analyst's job was to prepare people for set scheduled events of, like a central bank decision or corporate earnings or a bond auction. But then also, more importantly almost, to have an ear to the ground, talking to people in market, what order flow are they hearing, what rumors are they hearing, but then also monitoring, unexpected developments and being in a position where they should know ahead of time, kind of strategized or scenarios of how markets should react. So that was the squawk box to assist the trader in that way, to be their eyes and ears in a real time sense. So Refco basically went under, as you know. And then the analyst desk at the time had a really solid reputation, because obviously Refco had quite a lot of reach in terms of its satellite offices and so on around the world. And basically the desk got spun off into its own company, and that company was Randsquawk.
Okay.
So Randsquawk then was my brother, and at the time his business partner, and they ran the desk, and then I was pretty much the third employee.
Okay.
straight out of
I
college.
like the number 3. It's a number of completion, right? 3 strikes, you're out. Or the third planet from the sun. If you play hockey, you want a hat trick, and like 3 drive formations. So you completed the team.
Yeah. So I mean, when I started, we were just operating kind of 6 a.m. to 6 p.m. and we would just cover the European and the first part of the US session, and then we gradually grew the team out. We started covering the US hours. We started branching out, looking at single stock equity news as much as then just the broader macro, FX and fixed income. Built the team up, and I think we had at the peak, after a couple of years, about 20 guys working 24 hours a day from Sunday night to Friday night. And then my job was, after probably about year 4 or 5, I basically started taking over the European desk, and then I started an Asia Pacific desk. So I used to have to work in London doing the overnight, covering the Asian hours.
Wow.
Which was
graveyard.
I did that for a year.
And your wife made you quit?
Well,
you weren't married yet?
Well, I was with my now wife, but she was my girlfriend then. So
right.
Yeah, she that was
Didn't
a bit
like the hours.
Yeah, it was a bit difficult to manage at the time. Yeah.
All right.
But yeah, I mean, a great learning lesson though. I mean,
did you like doing it, Anthony? Because it's almost like being a host, except you're not interviewing people. And you know what? It's almost like, in a way, being like a sportscaster. You're describing the game. You're giving people some insight to what might be happening, what kind of pitch may come, or third and long, and how much time is left in the session. So, in a way, it's almost like doing radio every day, isn't it?
Yeah, it's certainly such a tough role to recruit. I always found, because we used to have all these super smart kids coming out of college, and they would know so much about markets, even more than me, but half of them. But the problem they had is that they weren't able to convey that in a concise and timely fashion on their feet, and thinking quite laterally of like, okay, this has happened here. What could be 3-4 domino effects down the road then that could highlight a potential trade opportunity for someone, rather than just literally calling out the news. There was a big difference between...
Well, that's because they don't even like to make phone calls. They would rather text, right? I mean, as far as the talking and the interaction, the younger generation, trying to have a live phone call with them. They only want to text. That way, they don't have to give you their full attention. They could be multitasking. But so it's kind of either have it or you don't kind of thing, isn't it?
Yeah, absolutely. And I think the constant timelines, the one thing I always say if a trader's not familiar with a squawk, is that when you're a trader, once you've kind of identified the trade that you want to take, it's kind of you're waiting for that opportunity to execute then. And if you're not in that trade, or it's not near that point of execution, you're kind of out of the market. Whereas when you're a squawker, you are literally accountable every second. You're on the hook because who knows what might come out. What if there is a global coordinated rate cut? It's not scheduled, but if you're 3 seconds late, like number three again, if you're 3 seconds late, that's it. Everyone will cancel. You'll lose your reputation. So
not only that, people don't like dead air. So, you know, what I mean by dead air, right, Anthony? You did it long enough where you're not saying anything and people are wondering, is this service working? Is there something wrong with my volume? So, you're constantly bantering just to fill the space. People think it's easy, but it really is a lot of mental energy to, facilitate a project like that. So now I know, what you were indoctrinated in, that, news and what's happening in the market, and you're an intelligence gatherer. You have to be, because that was your, how you broke in by listening to people that were so-called experts. And you learned who was really good and who was a good contrarian indicator while you're on the air. So you still do a lot of intelligence gathering. I'm a big believer in that you only have two eyes, and if you surround yourself with good people, that you're going to see things that you wouldn't be able to see on your own.
Oh yeah, absolutely. So, a lot of the stuff I do now with Amplified Trading is working with some of the more junior traders who typically are much more technical focused by normal path, I guess, to trading, where technical analysis is the main way of which they're looking at things. But then I come in and try to open their mind a little bit about, not that I try to convert them into being this news headline macro trader, but the kind of ability to have better awareness of potential risks that may materialize given the current narratives that are in play at this point in time, like what we're seeing with COVID, for example. There's various things that I would track, and when it comes to COVID, I'm not a medical specialist, so exactly as you say, part of what I would do as process is I'd go on something like Twitter, and I'd start investing time finding qualified people who I don't know at this point, and then trying to curate a specific bespoke list, for example, where I'm getting people with actual decades of experience at PhD level that are going to perhaps give me some degree of insight beyond what you're just reading as a headline news story. California cases at record high. It's like, okay, that's one part.
Thanks for reminding me. So that's where I'm at. So let me ask you this. A lot of people, I have an old expression, and a lot of news traders, they don't like to hear it, but I have a belief that people who buy headlines today sell newspapers tomorrow. So I'm very interested in how you use news to get an edge in the market, and also curious what your philosophy is for having positions before red events, say like the NFP or the Fed. I try and be flat and react to the reaction. I'm wondering if you try and get an edge, kind of knowing what the news may be and position yourself ahead of it.
There certainly is as you'll know, I mean, the week prior to non-farms, you have that kind of suite of employment-related data which can give you a degree of insight. But you and I know that non-farm payrolls, and whether you're Goldman Sachs or you and I, they can't get it right. Particularly in a pandemic situation. I mean, the numbers are so phenomenal, and there's so many methodology errors, as we've seen present with the unemployment rate, for example. So I agree with you. It's not, I 100% wouldn't encourage anyone, really, would be my advice, to have a position on, in an intraday environment, that is, trying to then second guess that they've kind of calculated that there's going to be an upside reaction because the number's going to be positive or negative. I would always say as well is don't try to hit market on that first initial spike. When the news comes out, there's a real lack of liquidity, the orders come out, and you can see the market starts jumping around just before then the algos hit it on the main headline. In the way I kind of explain it to new people is that if you think about an automated trading system, the first in, first out kind of chain of events, when you look at a kind of a multi-component report like payrolls, you get the non-farm change headline, and that's where the market reacts. But as you and I have seen so many times, that payrolls is more than just a singular figure, whether it's average hourly earnings or unemployment rate. And so you're better to wait, in my mind. The pre-work comes in the identification of the levels. So I go into it not expecting one outcome or another, although I have an idea. I don't force that on the market. I would look at higher and lower levels and play out then in my mind. And this is what I do as a strategy with every news type of event, whether scheduled or unscheduled. I'll think about kind of most bullish to most bearish scenarios and maybe a selection in between. And then, well, what course of action would you take should one of those scenarios materialize? And then it's about just holding fire, I guess,
right,
unless one of the extremities happens, because that's when there's generally a more reactive, cleaner, larger type move that perhaps you can get hold of. So it's a lot of what I would say is and your second question is more about ahead of these events. There's so much pre-planning that goes on.
yes.
I think that's a massive underserved thing. If you're a headline trader, effective one in my mind, and the guys I've seen be successful, it's never reactive really, unless it's a black swan event and you really get hold of something. It's very rarely is it reactive. Is even away from a scheduled calendar. If you think about the current context, what are we looking at? Well, there's data coming out this afternoon, but quite frankly, no one cares. If it's GDP Q1, no one cares about that anymore. No one really, jobless claims come out a little higher, it doesn't really matter. Look at the last couple of days, the COVID situation is key. So then for me, it's about, well, where can I get that sensitive information quickly? What are the current statistics? What is the steepness of the trajectory of these cases and these hotspots? And also, where is Trump at this given point in time?
Yeah.
What's his itinerary? Where is he going to be? Because as we've seen, when he's in Arizona, for example, like he was, Arizona is one of the worst hit areas in the moment in terms of increases. Of course, he's going to increase the rhetoric about China, for example. When Navarro made that comment, these things, I think you can. Obviously, you can't predict the precise timing, but there are ways and means to be more intelligent, I guess, about when those risk kind of events could happen, I guess is what I'm saying.
So you've been doing this for a while. Have you ever seen a period where there have been more tape bombs that have been coming across from, political leadership here in the U.S.? Have you ever seen more tape bombs? Before COVID, it was a trade deal, right? Trade deals okay, trade deals off. They still pull that rabbit out of the hat every once in a while.
Yeah.
Besides COVID, I'm curious right now, Anthony, if you're starting to think about the elections coming up here in the U.S. and what kind of news flow you might be looking for to give you direction on risk. Is that what you're starting to beam in on?
Absolutely. And I've got quite a good series of graphics actually. So
You could share your screen. Beautiful.
Yeah. So first off, that trade war situation that you mentioned, I'm sure most people viewing have seen this before. And this is that idea that obviously we know Trump's kind of agenda here. We know his fixed timeline politically that he has. And when we have a situation where there is what we're seeing, say, here, which is the US is having its biggest rise in COVID cases in quite a long time. Right. And it's specifically happening in areas like Arizona or Texas, for example. That for me then, as per what Trump does with Twitter, he needs to almost disassociate himself from the fact that the virus has anything to do with the fact that he was last to lockdown, he was the first to reopen, all these types of measures which inherently would have assisted the spreading of the virus. because of this quest to get the economy kind of firing again. So here, what would be a political tactic to deploy would be, well, it's the Kong flu,
Yeah.
it's the Chinese virus, as he keeps saying. So you can almost anticipate then that the worse this gets, the more the rhetoric will turn negative, anti-China. And then this is when we're in this talking tough section on the right-hand side. The market then starts to have a bit of downside, and that's when he starts pushing the buttons on Jerome Powell again and so on. But then, as you rightly said, we go through this ebb and flow, and if the market does sell off and it's more continuous, all of a sudden, I think we had Kudlow coming out just before I came on, and he was saying, yeah, we're going to have a V-shaped recovery. And then Navarro the other night, half an hour later, oh, you took my comment out of context.
Yeah.
For me, this is all the administration managing the public perception to appear to be taking a firm stance with China. But as we saw, a week ago, Trump and Xi apparently have been cutting the deal anyway to get a second term about buying agricultural goods and these things. So,
has China acted on that though? I know that was
one
a
of the
request.
An interesting thing on the phase one of the deal, that was the beginning of the year when it was all kind of quite positive. That was when it was looking a bit shaky in December. Then they struck that deal, and China said they'd upfront buy $200 billion worth of agricultural goods. They were actually committing to that when you start tracking the actual figures of the actual raw commodities, even though some of the headlines that were being splashed were saying the opposite thing about it's looking unsure whether they're going to follow through. So again, you've got to understand with mainstream media who is reporting the news, what is the source, and you've got to have a breadth of sources to verify things, not, obviously some are right, some are left, and so on. So, yeah, I mean, moving on from the trade war, though, as you said, we kind of just had a quick look at these cases. And for me, the COVID thing is so key now for the election. And, as we go through these areas and, the list, as we can see here, Florida, Arizona, North, South Carolina, and so on. A lot of these are, if we start looking,
red states, except for California.
So what I'm interested in here is not so much the deep kind of blue or red states. What I'm more interested in is the COVID situation of the toss-up or leaning states, the swing states, essentially.
Okay.
Because a lot of that is where, as we always know, the balance of power generally lies. And here, Texas is on there, North Carolina, Arizona, Ohio, they're all there. And their college seat or college representation in terms of the count is pretty high, Florida included. So for me, it's about, well, how does it perform in these areas? And what can Trump do? I mean, you've seen Trump trying to cut deals for the energy sector, obviously very important for Texas. Mnuchin talking about another stimulus on top of what they've already done. So the tracking of the virus in step then with looking at the individual polls in these states, I think it's going to be something interesting that certainly I'll be looking at. And, you look here at the RCP polls, the average poll of polls across the US.
Okay.
Biden's plus 10 at the minute.
Yeah.
But I think one thing that people forget is that Biden's always been in the lead. So I wouldn't, as we've seen so many times, and Britain was the most case in point in 2016. No one thought, why on earth would you vote for Brexit? I mean, economically, it's almost like suicide. But that was the biggest mistake that analysts and people in markets made, because we didn't understand then the underlying sentiment in the middle of England. We're all caught in this London bubble, basically, which is a very different place. So here, I'm not kind of saying that here Biden, it's a walk in the park now at this point, but it does bring up then interesting things. I think Kramer yesterday was talking about that's why the market's selling off. I'm not so sure about that. The Democrats would have to come in with some sizable stimulus anyway for their own political well-being. But here's a kind of final interesting, quite telling graphic, and this is looking at the presidential years.
Yes.
And it's looking about when we've swung from Democratic to Republican, or the other way around. And generally speaking, when we swing from Dems to Republicans, the market has a positive performance thereon out. When we go from Republican to Democrat, the market nearly always sells off in the following 3 months.
Interesting.
You remember when Obama came in? I mean, the market got crucified, but not that it was his fault.
Yeah.
At the time.
Yeah, the financial crisis. Yeah.
Yes. So markets and politics or economics is so important for politics. Whenever you go through a big shift where you see large mass unemployment, confidence is low, there's inequality and division in terms of wealth gap, that leads to social change, and that's generally what you see over the long term. So that's why the pandemic is really important. And what I see Trump doing here, or I'd anticipate him to do, is worry about the accumulation of debt later and just spend as much money as possible.
Yeah.
To put as many stimulus checks in your pocket.
Bernie Sanders on steroids.
Right, because he has to.
In a way, right.
Right, because this is the difference between the USA and China, for example. What Trump is concerned about is the next 4 years,
right,
or 4.5 years.
Xi's worried about the next 100.
Right. So for Xi,
right?
I mean, when you understand that the trade war headlines when they're coming out, and you think about it, it's always the US that's the aggressor. It's always the Western developed markets that are normally the aggressor on these issues, because with China they're playing that long game. The inevitability is there. The infrastructure is happening. The alliances strategically is what's so incredibly interesting right now, because I kind of look at the world as in you've got Team China, which is kind of Captain China, and you've got Russia, you've got Pakistan, you've got Iran, and then you've got Team USA. Yeah. But Team USA is losing a lot of allies right now.
They're alone on the court.
Which is...
Who's with them? I mean, I thought Modi was with him until a week ago. I thought that when the president went to India during the beginning of the pandemic, that maybe they had an agreement to be a proxy against China and started that little clash in the Himalayas. But now Modi's talking to China. Look, in fact, I interviewed someone yesterday. It looks like the U.S. is really alone. And when you need global cooperation, I don't think there are going to be many willing. Do you think that if Biden is elected, that there'll be a repair of those relationships? Or is it like when somebody, say, has been coming to your store, but they go down the block to someone else and it's just as good for the same price, that they may never come back?
Yeah, I would say that you're more the former, which would be that, and I think that's why actually I think China would prefer Trump.
Biden prefer Trump.
For Trump, because if Biden comes in and he does start to rebuild these relationships, let's say, and with, say, Europe or Britain, because what was it? There was a headline yesterday, and the US is firing shots at the UK and Europe again with more tariffs and so on. That's not so. A united America with its Western allied forces, if you want to use that terminology, I think would be much more problematic overall for China rather than a singular force like that in Trump. So, I kind of see it like that at the moment. But I get what you're saying. At the end of the day, I think with a lot of this stuff, when they get into power, what politicians say and what they do is two different things. And when they get into power and it comes to just trying to get the economy going, I don't know.
Let me wrap it with this before we talk about your business model and what you do. What's the most important fundamentals and news flow that you pay attention to when determining potential currency trades, Anthony?
I guess the most centrist to it all for me, if I was simplifying it, would be central banks and what the forward guidance or the rhetoric is coming out to central banks at that time. I mean, the underlying backstop for me directionally over the medium term, let's say, is derived from the policies of which they're deploying at that given point in time. So understanding where the market is and the fluctuation, if you like, on how aligned or not they are with what,
Yes.
when we saw the dot plots from the Fed,
Right.
what a joke.
Yeah.
I mean,
Yeah.
that's the kind of thing where, that type of, I mean, I think the dot plots are running on fuel, on jet fuel in terms of, or on fumes, I should say, at this point, because then they're just redundant in this type of uncertainty.
Yeah. We've had to throw away a lot of things that were working traditionally in something that hasn't happened for 100 years. And, this pandemic has been easier for me to trade than the last one.
Yes, how
100
was
years
that?
ago, Anthony, 100 years ago,
when you
Blake
did
says I'm an old guy. So,
when it was SARS and MERS,
yeah.
how do you remember that in market
I
conditions at
don't.
the time?
I really don't. I know I didn't feel any, the kind of fear, and there were no lockdowns here. It was kind of like, oh, that's just happening in the rest of the world, kind of thing for Americans. And
Mm,
we're finally learning what people in Asia had to go through with those other
mm.
epidemics. Do you have a view on the dollar here? I mean, it's pretty. You have people in some people saying that we're going to have, because of emerging market debt and there's a shortage of dollars, that we could have a one heck of one more blow off rally in the dollar. And you also have people that, for obvious reasons, the Fed action, they want to debase the currency. It'd be easier to service debt that way. Where do you come down? You come down constructive, bearish, or strongly neutral?
Yeah, probably strongly neutral, because I would say my expertise in what I look at day to day is much more short-termist than
Okay.
looking at that kind of outlook. So
Okay.
for me, at the moment, I mean, the dollar movement has been absolutely indicative of just generally the intraday risk appetite. The correlation with the equity movement, for example, and like what we've seen quite tight with oil recently, all just by product of the moving goalposts of people's expectation about the shape of the recovery on the pickup now, and the fact that they're not going to be able to kind of they're going to have to put the brakes on the reopening, and that's not priced in, that rally that we've had in equities. And so at the moment, the way I'm looking at the dollar is just purely in that strictest sense.
Okay. It's
But
fair to be neutral. I mean, you look at the chart, it's gone nowhere when you look at a long-term chart. Why don't we now talk about what you and your company do at Amplify Trading,
yeah, sure.
and tell me what your position is. You're training people and working with people. You also, I believe, I did a little research on your site, that you
Mm.
have accredited courses for at certain universities to teach kids how to trade.
Yeah, so hold on, let me just turn something off 1 second. So we have basically two kind of main divisions, I would say. The one I'm currently most involved in is the trading side. The other side is the technology side. So on the
Okay.
trading side, we have a small team of proprietary traders, all of which would have come through our training program that we would deliver now fully virtually, but we would normally deliver. We've got a small trading floor that I'm sat on now is just around the corner from the Bank of England.
Oh,
So we would take people from lots of different backgrounds, essentially, and they would go through a series of learning over a period of basically months. And then at that point, during that process, they get to trade our capital, a relatively small size in the development phase, and then that scales up then to trading, all being well, of course, trading full futures with a global macro-led cross-asset class kind of strategy intraday.
okay.
So that's the kind of trading side. That training that we do, though, is accredited by quite an old industry body in London, and it's equivalent. What we train or what we deliver on that side is the equivalent to doing, if you do the whole training program, the same status as if you completed a university degree in the UK.
Like a 4-year degree, like in the US they call it a BA or a BS.
Right. Yeah. So
undergrad degree.
Undergrad, exactly. So
okay.
So it's a pretty high level in terms of a qualification. So some people use it for. We've had some guys who are working maybe in a hedge fund sales at a bank, for example, but have never actually traded, for example. So they need some exposure to taking some real risk. They need to accumulate a couple of months of pulling the trigger, so to speak, and then that might qualify them. And then they leave us and they go get a job working in a different role, so they can use it as a career pivot, for example.
Nice. Nice.
So we get a real variety of different types of people. I mean, that would be
that's an important niche, because when I was younger, all I had to do was go down to the exchange, get a job as a runner or a clerk, and just be immersed with traders. And if you're industrious, you get to talk to people and learn from people on a trading floor. Now they're all bowling alleys, so people need something like this to be prepared.
Yeah, absolutely.
What do you think? What do you, people try and sell this, Anthony? I wonder what your answer is. They go, well, I know the secret to trading. Now, I say the secret is there is none. It's just hard work and learning to live through stuff, including adversity. And if that scares you, do something else. What is a secret to you?
Well, to me, there's just no shortcuts. Anyone who tells you that there is, I think, is not telling you the truth. In short,
okay.
I think you need to be the people that I've been around, that I've seen who've been successful. There are a few that are naturally, that kind of gifted person who it almost comes effortlessly, and they just it just happens. But they are the one in a million. Most of the other guys are the ones who, they're so immersed in markets. They kind of live and breathe it, and they think about it all the time, and they work hard at it, and they're honest enough to know that they've never mastered it, and that the market changes and it evolves, and you need to evolve, and it's those people that typically win out in the end.
I used to carry my commodity perspective chart book around with me everywhere. I'd turn it upside down. I'd have coffee stains on it, ketchup and mustard, depending upon what my diet was like at the time, but drawing lines everywhere. And so, you can't learn experience, right? It only happens with the passing of time.
Yeah. And then, say, when I help people to learn about markets who are relatively new, obviously I can help accelerate it using my own experience, like what you could. But at the end of the day, you've got to live and feel and breathe it, because only then will you really see how you're going to react under those circumstances. And, will you be disciplined when faced with certain situations, and will you make that right decision that you know what to do?
Okay.
Will you do it? But that's the side I take care of. And then the other part of our business, which really has gone through a massive growth phase, actually, and now that's actually the bulk of what we do, is our technology side. So about 4-5 years ago, we came across 2 super talented young individuals at one of the top London universities, where we were involved with some of the teaching. And they had this idea that they were at the time were applying, because they were still studying, they were applying for all of the major banks kind of grad programs. But neither of them have ever actually done anything that was related to actually practically doing what they were applying for. I think both of them were looking at sales trading roles. And so what they went about doing was writing their own software to assimilate a sales trading market making type simulation that was intelligent, where you could create your own simulated order flow with all the participants reacting and the market adapting accordingly. It's kind of the summary of it. So we basically backed them then they developed it. We bought the technology fully from them a few years ago, and then we've kind of reinvested a lot of funds back into that. And now we've broadened that out. So we have simulations where you can do M&A, IPO, risk managing, and compliance. You can do all these different types of things. So it's more than just trading now. And so what happens is the universities, and we're going out to the States actually this year with Morgan Stanley, which is one of our partners on the technology side. And universities basically are amazing at teaching you theory. There's no better place. But what they're not so good at is the connection to the industry in terms of the practicalities of getting you ready for what it is you're going to do in the workplace. And as you and I know, what you learn and what you actually apply day to day is quite different.
You mean like trading a demo and having real money on the line?
Yeah, it's kind of a similar type of thing. It's just different. So
people used a paper trade, Anthony. You know what would happen if you got stopped out on a paper trade? You'd get a paper cut. That's it. So this was really enlightening, and I think that probably some people are going to be interested in following up with you. What's the best way? You want to show us or give us?
Let me just show you one thing that some of the guys might find useful, which is this. I don't know if you've already seen it, Dale, but we have a YouTube channel.
Okay.
So I do a daily macro briefing every morning, London time, where, it's about 20 minutes long, and I just go over like the main key themes of that day. And I'll review what happened in the overnight session, what the news flow is, and the calendar for the day ahead, and then I'll go through and give my view on the fundamentals, what I think is going to happen today.
Okay.
So that's like you would on the Squawk box in your morning call, sort of thing, but visual.
Squawk has gone video.
Exactly. So that's. Feel free to. There's some other stuff there, and I've got one of my colleagues who talks about more things like Hertz bankruptcy and Robinhood explained and these sorts of things. Which is,
I thought Robinhood stole from the rich and gave to the poor. The markets don't do that, don't they? Steal from the little guy and give to the rich. Well, it's an oxymoron for the firm. Okay, anyway.
But yeah, the YouTube channel, or otherwise, the easiest thing is just to go on the Amplify Trading website, and then let me just quickly show you. If you're interested in the trading side of things, then essentially you just need to go on the red section here. If you're a student, then there's the blue section here. But yeah, we're doing our summer intakes at the moment. So we've actually got 85 interns with us at the moment.
Wow. What are the dormitories like? In college, mine were fun.
Well, I think they're missing out big time this year.
They are.
They're sat in their mum and dad's front room, most of them.
Okay.
So they're losing out.
Anthony, like it or not, you're now my trading warrior brother. It was really great talking to you, and you really provide a niche that's well needed for people coming up in the business nowadays. Continue your great work, and now I know how to find you on YouTube, and I want to thank you for coming to edify our community about what you Amplify Trading does.
No, and you're welcome, and yeah, anytime, happy to help.
Anthony Cheung, you and your family, hope you remain untouched, and all the people you work with, and good hunting during the summer trading season, buddy.
Yeah, you too, Dale. All right.
All right. Thank you,
care.
Anthony.
Bye.
Okay, everyone, Anthony Cheung, and that's going to be a wrap for us. Remember, don't just count your pips, count your blessings, and we'll see everyone tomorrow. You're very welcome, everyone.